Hello, everyone, and welcome. We'll be looking at key jargons to note as a finance student or as key student trying to broaden their horizon. So one of the first one, which is ticker. So ticker relates to the stock market. So we'll be looking at the Nigeria Stock Exchange, the Nigeria Exchange Group in this scenario. So what does ticker mean? Basically, the sticker is basically alphabetical symbols that represents a typical publicly traded company on the Nigeria Exchange Group. Meaning we have a company name. So the company name can be long or short depending on the case. So there's really a ticker, those symbols that we use to represent the company. A good example, we have MTN Nigeria Communications PLC. That's the full name of MTN. But the ticker on the Nigeria Exchange Group is basically MTNN. That's four alphabets MTNN. So that's the ticker that is basically used to represent MTN Nigerian Communications PLC. That's a ticker. Good example. The second jargon to take note of is diversification. What does it mean to diversify? So we have portfolios. Portfolio basically you have different assets, different classes of assets into one. So when you're trying to diversify, you're having a mix of assets in your portfolio, meaning you're trying to diversify, you're trying to reduce your risk. Diversification can comes in place of the stocks or the shares you bought or you are trying to buy. Meaning, you can have shares in the consumer goods industry, you can have shares in the financial services industry, or you can have shares in the insurance industry, the pension industry. Basically, you're trying to reduce your exposure of risk. Which different macroeconomic conditions have ways that they affect these various industry basically. So you're trying to reduce your level of exposure, your level of risk to these various industries, to these various asset classes. That is diversification. The next one we have FANG, which is basically an acronym. This is not Nigeria's specific. It is used to represent American tech companies. So it stands for the F stands for Facebook, the A stands for Amazon, the other A stands for Apple, the N stands for Netflix, and we have G standing for Google. Basically, this is an acronym. The next jargon to take note of is float. So what we call float basically refers to the number of shares available to the public for trading. Remember, one of the key jargons we spoke about earlier was IPO, initial public offering. When a company is trying to list first time on the Nigeria Exchange Group, it goes through what we call initial public offering, which is the IPO. So the not all shares are actually available to the public for them to trade, which is the retail investor, the institutional investors to have. Some of these shares are restricted to maybe directors or founders of those companies. So we have floats, which is telling us that, oh, this percentage of all the companies that is in the memorandum of association of the company, just this percentage is available to the public for trading. Maybe 70% or 89% is available for trading. So floats also affect the volatility or the liquidity of the stocks. Yeah, it affects the liquidity of the stocks, not volatility, the liquidity. How liquid a stock is basically the movements of the stock it affects it's also that's how float works. The next jargon to take note of is the blue chip stocks. So they are basically stocks of large industry leading companies. When you hear of blue chip stocks, so we are talking about industry leading companies, you having their shares or their stocks. So that's for blue chip stocks. Then we have SWOT, not SWOT per se, not WOT, which is strengths, weakness, opportunities, and tradable. This one means stock worth over 1 trillion naira in the Nigeria stock market. So stocks worth over 1 trillion naira. So you have different stocks here. You have MTN, you have Airtel, you have Dangote Cement, you have Boa Foods, you have Boa Cement, and you have some of the financial services leading companies also. You have Zenith, you have GTCO and the like. So they are basically and is also an acronym like we have FANG also. So it stands for stock was over 1 trillion naira. So the second to the last jargon we have FUGAS. So FUGAS, basically what FUGAS is, it is an acronym for Financial Services Leading Company. You have the F, which is for First Bank. Yeah. You have U, which is for UBA. You have G, which is for your GT, your Guaranteed Trust Bank. You have A, which is for your Access, and you have Z, which is for your Zenith. So that's another acronym. Then we have the last one, which is called ethical war. I'm very sure we're not familiar with, or we are familiar with. It is also called Chinese war, but the more appropriate term now, it is called ethical war. So basically, you're trying to put in controls in place in order to limit conflict of interest in a range of services. So when you say, oh, you're putting in a Chinese war, you're trying to prevent some scenarios from happening. So the real term is now it is referred to as ethical war now, not Chinese war, referred to as ethical war. So those are the key jargons to take note of for this episode. For the next episode, we're going to be looking at other key jargons for you to be aware of as a finance or a finance inclined person, or relating to the stock market, the Nigerian market, or other various technicals such as valuation or modeling, all those technicals jargon you need to be aware of. Thank you. We'll meet in the next video.